Is the AI bubble popping? That's the big discussion that's taking place in the forums this week and in the news wires. My opinion is no, it's not popping, but we may be experiencing a mid-cycle pullback of a decent size. And I think one of the biggest headwinds going into next year is going to be the midterm elections. Because if the Republicans lose some seats, that's going to have a major impact on whether or not they can achieve their agenda. So that's the biggest risk going into 2026, as I see it. Back to the AI bubble. I think the biggest risk to the AI bubble as we go forward in the years ahead is actually going to be wealth inequality. And why I say that is because as wealth inequality grows, and it's going to grow because AI enables it, because AI is very good and beneficial for employers and people that have capital, and it's not good for people like employees because their jobs will be replaced. So it's going to increase income inequality or wealth inequality over time, and eventually it's going to create civil unrest. And when there's civil unrest, eventually you're going to see politics move towards the left. There's going to be an increased amount of popularity towards socialism. And once that happens, you're going to end up in a situation where they're going to want to redistribute the wealth. And what I mean by that is you're going to see wealth taxes come into play, where the politicians in power are going to introduce a wealth tax whereby it transfers the wealth from the wealthy to the not wealthy. And when that happens, that is what is going to really pop the AI bubble. Because what pops the bubble, and you can read some of Ray Dalio's recent stuff on this. He's done an excellent job putting out articles relating to this. Bubbles are created by an increased amount of leverage in the system, aka debt. And in order to service debt, you need money. So as long as the income coming in from the assets that were purchased with that debt is sufficient to service the debt, then the bubble will continue to grow. And if those underlying assets continue to appreciate, people will continue to buy them in a mania way. But once the cost of that capital or taxation on that capital is introduced, either interest rates or like a wealth tax, then all of a sudden there isn't a sufficient enough amount of money to sustain that bubble. And so the bubble then gets popped. So it's either going to be higher inflation, which drives higher interest rates, which then makes, there's not enough money to sustain the bubble. And that may happen. Or it's going to be a move to the left in terms of politics, which then introduces a wealth tax to redistribute the wealth in an age of AI which grew wealth inequality to huge differences. So it's going to be one of those two things: redistribution of wealth or higher interest rates caused by inflation. But that's what I see causing this bubble to be popped, and I don't see that happening anytime soon. That's why I see this current pullback or the pullback that we see in 2026 due to the midterms being more of a mid-cycle pullback. And I think this real AI bubble is going to pop probably towards the end of the decade, late 2028, 2029, when there is the election in the US. And I see that as being the biggest risk as we go into the end of this decade. All right, everyone, have a great day.